Welcome to NMN's Financial News You Can Use. It is June 28th, I can remember. It's the day after my daughter's birthday, so I got the date right. Welcome everyone. I hope you had a great weekend. I'm going to talk a little bit about safety and annuities, and John's going to follow right up with safety in our portfolios. I think that everyone's a little concerned. Dow's back around that 25,000 mark. We keep going up and down. We always end up at that 25,000 mark. So for some of our clients, what we call vulnerable millionaires in most cases, that if the market dropped 40%, their whole lives would change, especially if they're taking income out. So Social Security is a form of an annuity, right? You pay in all your life, and then once you retire, they promise to pay you for the rest of your life. That's an annuity. Well, if that's not going to be enough for you, you might think about, do I need a different type of annuity? Something that will also guarantee me payments for the rest of my life, but give me some added security during my life, when you're still working, for example, if the markets are going up and down. So designing the right annuity is like building a bear. If you've ever been to Vermont, they have a Build-A-Bear workshop. You probably see their advertisements. You can build this bear any way you want. You can put on any kind of clothes you want on it, any little added benefits and bells and whistles. You should still be very careful about the annuities you're thinking about, and do they fit into the portfolio, and are they charged? Do you get the right amount of benefit for what you're being charged? So I just want to tell people, unlike Susie Orman, who says never, 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 I think that sometimes ever is okay. So think about that as part of your portfolio. So John, that's my little bit about adding some security to the portfolio. I think you want to add some more comments on
so,
that.
We use this year to date, 2020, we have just, it has been a different year to say the least, right?
You're almost speechless.
I am. The things that have happened this year are just absolutely nuts. As portfolio managers, the important point is when the market drops. So if you want to rate a portfolio manager, a financial advisor, or a single manager, or a mutual fund, you have to look at how far the market drops, and then you have to see where that portfolio is in comparison with the market. And so I've got a couple of some data that I wanted to show you, and I'll bring it in here.
I will help. All right, John is becoming quite an artist. Is this too high, do you think, or we should lower it maybe? Let's hope everybody can see it.
Okay, so this is our covered call portfolio.
Which is our double income portfolio.
Double income portfolio. Many people say, well, I don't need income. Well, that's fine, but you'll see that its defensive posture and what it can do in a down market is crucial. So here we are year to date, beginning of 2020, out to last Friday, 6/26/2020, the Mapato covered call is down 4%, a little over 4%. Now remember, I said that you need to compare that to what the index is down that is closest related to the portfolio. We have just about the same amount of holdings that are in the Dow, just about 27 or so. So you can see that the portfolio, using the covered call technique, is very defensive against the market. It's done exceptionally well. The problem with looking at just a year-to-date number is that you really have to stretch it out and watch markets work over time. So what we add to that to see if we're on track is, what if we go back year over year, which is this number here, meaning that we would go back to June of 2019, the 26th, out to last Friday in 2020, and then look at the numbers again. And this is from our model portfolio. These numbers come from a third-party software. We don't calculate these numbers. The APX goes in, looks at the returns, less fees, and then gives us these numbers. So here we are, year over year for the covered call. We're up just about 3%, June 2019 to June 2020.
After all fees.
After all fees. Again, we see that the Dow is down 6%. So that tells us that the management of this portfolio, sometimes called the alpha, that's a technical term, shows that the portfolio does extremely well in this sideways market year over year and this down market year to date. So that is crucial.
John Kincaid, thank you very much. I'm sure all of our clients are always happy to know how well their portfolios are doing. Nobody likes to be down. We continue our race to zero. And by the way, Dennis Nelson is not with us again today, our Oracle, but I know he's going to be back on Monday. So we do have to give him a little time off. Marcus Bickle, thanks for coming back. How's the new baby?
The new baby is great. This time last week I was at the hospital with my beautiful wife having our second child, Jonah Bickle. He is doing very, very well, and so I'm back in the office.
And how about Talia? How's she doing?
She's doing fantastic.
Right.
My wife is such a trooper, absolutely.
Yeah. And your mother-in-law from Israel's here, right?
She is, and she is an incredible help. Having someone else to help with the baby, just an extra set of hands, it's...
Moms are irreplaceable.
They really are.
They're irreplaceable. Okay, what are you going to talk to us about today?
Well, I wanted to talk a little bit about the portfolios and the market in general. So one of the things that we do in our portfolio is we have certain guidelines that we require ourselves to follow in the event of a stock going up very big or going down very big. Recently, as of last Thursday, we've seen a little bit of a shake-up in the social media sphere. We do hold some of those, Twitter specifically. Unilever decided to part ways with Facebook for the remainder of the year on as far as their advertising. Now, Unilever is an enormous advertising company, one of the largest in the world.
What do they do?
They do a bunch of smaller companies, including things like Coca-Cola.
They're an advertising.
They're primarily an advertising firm.
Right.
And with them, that kind of opened the floodgates to a lot of these other smaller advertising firms. And since then, roughly 130 companies have parted ways with the social media sphere for the remainder of this year. And that's kind of driven by, frankly, politics. A lot of companies do not like the direction that social media has gone, however you want to look at it, in regards to the political message, and they're deciding to take a step back from that. Now, that's a lot of ad revenue. That's a lot of money to these companies like Twitter and Facebook. So, obviously, on that news, they were down. So that tripped our 10% down for Twitter. Kind of going full circle here. When that happened, we were able to look at the position as a whole, and even though the position itself was down 10%, the actual underlying stock, Twitter was, we were still profitable in our covered call, our option, that the double income.
Okay.
Exactly. So I was able to go in, buy back that contract at a very, very small price and a great profit, and then exit the Twitter position in its entirety, kind of preserving it from any further downside. Because that kind of volatility is probably going to last a while. We don't know, it's still really fresh, we don't know who else is going to jump on that bandwagon, what other kind of problems it might cause for social media. So we decided when it tripped that little 10%, we decided to step out of the position. And if we like it, when it's lower, we'll buy it again.
And we probably get out with less than a 10% loss.
Oh, absolutely,
right? Because
absolutely.
of the double income. So yeah, and we'll go back in later, and I think that's the strategy. That's what you call really managing a portfolio. And I know there was, I don't know how our time is, but there was a stock called Workhorse that is recently just skyrocketed. This is something we might put in our portfolio for our smart generation, for our younger group of people. And by the way, we're going to put a little contest out there for a new name for that portfolio. So you'll have to watch for that.
Absolutely.
But tell us a little bit about that. Just we got about 1 minute.
So Workhorse is in a very small company. We call them small caps. They're little bitty companies that don't have a huge market influence, but they've been really active in the electric vehicle arena. And they recently got a contract for electric vans. And that has really made investors very, very excited because that's kind of an area that no one's into yet. Tesla doesn't have an electric van. I don't think anyone does. So people are seeing this as an opportunity to kind of get on the ground floor, and the stock has been up.
Well, yeah.
Incredible.
And especially with all the deliveries, all the vans that are going to be needed.
Absolutely. You
yeah.
see those Amazon vans, that would be a big user of that kind of thing. And when anything is up like that, we do decide to often take the seed money and then kind of go from there to preserve the investment.
Yeah, we like sell half and then keep half, or sell the original investment. So that's all we have for this morning. This is the Naples Money Managers. But remember, most of all and most importantly, you matter.